It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, talking about your property news and information in Brisbane, Adelaide, Canberra, Gold Coast, Melbourne, everywhere right around Australia. And of course, we are streaming on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts, and Amazon. Well, it's a Wednesday morning. It is the 9th day of the month. And in a move that caught many economists off guard, the Reserve Bank of Australia yesterday held the cash rate steady despite widespread expectations of a 25 basis points cut. And let's face it, the markets really had priced in a reduction that was needed to support softening domestic demand and persistently low productivity. Now, when I say that many commentators and economists were expecting the rate cut, only last week I was talking with Eliza Owen from CoreLogic. I did cite the trade tariff stuff, and this is what Eliza had to say.
Yeah, so despite some of the uncertainties internationally, you've had a big question mark around oil prices recently and the tariff trade wars that are kind of going on, it seems that most major banks and data flows are showing that we are ready for more rate cuts. This was pretty pronounced from the monthly CPI data, which came out last week. It showed that annual headline inflation came down to 2.1% over the year, and that was down from 2.4% in the previous months. And the all-important core inflation reading was down as well. So that was within the 2 to 3% target, 2.4%, and that had also come down from the April read. So that basically firmed up this idea that, okay, inflation is still continuing to come down. We're probably good to cut again. It's even brought forward expectations around a rate cut for the July meeting among many forecasters. I think in spite of everything, inflation is still coming down. We've still got pretty tight labour market, but that doesn't seem to be re-accelerating inflation or wages growth terribly. So it looks like we'll probably get at least 2 more cuts this year.
It would be unusual then, with this one coming up in July, that we wouldn't get a 25 basis point cut. That's probably where it's headed, yeah?
Well, I think the RBA could actually move another 25 basis points. It's just that the expectation of a rate cut has been brought forward from the August meeting to the July meeting because the inflation data was looking a bit more positive. Outside of that, if we don't get the rate cut this July, I would certainly expect one for August and then potentially another one for November.
And commentator Anthony Landau, as recently as Saturday, when we were talking about the rate cut, had this to say.
Look, I think they'll go 25 basis points. I think it's fairly clear we're on track for another deduction. It is arguable to take it to 50 basis points just to get the job done, but I think they'll take a cautious approach and go 25 basis points.
Yeah, so online commentators were very quick to respond. Some labelled the decision a cautious misstep, arguing it missed the opportunity to give households and businesses much needed breathing room. But the RBA, they signalled caution, citing a heightened level of uncertainty around both global supply and demand. They also warned that global trade tensions are still expected to negatively impact economic activity, and there's also concern that households and businesses may hold off on spending until the outlook becomes clearer. So what do I think about all of this? Well, I just think it's a missed opportunity. With inflation showing signs of easing and consumer confidence still fragile, a 25 basis points cut could have provided real relief for mortgage holders doing it tough. Instead, the RBA, as we know, played it overly cautious. Households needed a sign that support was coming, but they got silence. You know, this hold, whilst it may preserve flexibility for the RBA, it delays much needed breathing room for everyday Australians battling rising costs.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
Right, let's now go to Dubai for a little bit of an update for those Australians moving to Dubai to make a whole brand new lifestyle for themselves. And there may be a few more on their way out the back door after yesterday's RBA decision. As we move into the second half of 2025, we're getting a clearer picture of just how strong the Dubai real estate momentum has been, especially when you look at the Q2 numbers. They are showing impressive growth across all key asset classes. So Mario Volpi is back with us from Dubai. And Mario, let's walk through the sales performance in some of these top performing areas in Dubai to help our Australian audience understand what is driving the market right now.
Well, there's definitely a lot to go through, Craig. So let's start with sales. First half of this year saw an increase of 40%. That's close to $89 billion achieved, which translates to 98,603 property sales. This growth was fueled by record-breaking second quarter, which saw 53,118 transactions. That was worth around 184 billion dirhams. And that was a 25% increase compared to the previous high of 147.2 billion dirhams in Q4 of 2024. And that was 5.39 increase in transactions as well. The breakdown in the asset classes were plot sales hit 32.2 billion dirhams from 1,384 deals. That was up 49% year on year. The villa sales were 66.5 billion dirhams from just over 10,000 deals. That was up 38.3% year on year. And apartment sales were 81.6 billion dirhams. That was up 18.7% year on year.
And it's interesting to have a look at the average per square foot price now. That is standing at 1,607 dirhams. So let's have a look at the top performing areas. Where are those, Mario?
So in Q2, JVC came out on top with 4,930 transactions. Second was Business Bay, that did 3,143. Al Yalayis 1, which is areas like Damak Lagoons, Mira Oasis, for example, they came in at 2,867 transactions. Wadi Al Safa, or basically Dubai Land, was next with 2,483, and Dubai South came in at 2,248 transactions. In Q2, the most expensive property sold was actually a tip plot on Palm Jumeirah that sold for 365 million dirhams. And off-plan sales accounted for 66% of the market and 34% from the secondary market. And the most popular price brackets was in the sort of 1 to 2 million category with 32% share. That's fairly obvious, really, being it's one of the lowest. Under 1 million came in next with 26% share, and the 2 to 3 million bracket was third with 17% share of the market.
So some pretty interesting numbers. It's all on the up and up, as we say. And in recent years, there has been this clear shift in global wealth migration, and the UAE seems to be right at the heart of it. It's no longer just a financial hub. It's becoming a preferred destination for affluent individuals and families worldwide. I think we can agree on that. And Mario, from a real estate and lifestyle perspective, what factors are positioning at the moment the UAE as such a powerful magnet for global wealth?
Well, there's so many reasons, Craig, but I guess some could be that the UAE has a very high standard of living, and it has investor-friendly policies driven by the government, and those are changing all the time. Real estate obviously is a gateway to residency with the 10-year golden visa that's granted by buying a 2 million dirham property, which, as we know, offers long-term security without income, capital gains, or indeed inheritance taxes. Another reason could be that the rental yields in Dubai are up there. I mean, they range from 6 to 8%, overtaking many global markets. And of course, the real estate sector benefits from these maturing regulations, digital registrations, and definitely investor protection. But beyond Dubai, there are competing emirates such as Ras Al Khaimah, as we know, with the arrival of the first casino in the Middle East, and Abu Dhabi, which is what I call quietly competing for the spoils. And lastly, you get more bang for your buck in Dubai because $1 million secures 980 square foot of property, whereas in London, the same amount of money will only get you 355 square feet, or indeed in Monaco, that's only 172 square feet. And I think these, along with many other points, obviously, that I've not mentioned, are some of the reasons everyone, not just high net worth individuals, are making the UAE their home.
Yeah, no doubt about it. When you have a look at that $1 million, just under 1,000 square feet, 355 in London, I mean, it's just no comparison. Now, for something a little bit different, there's a unique and rather creative stretch of road making headlines in the UAE at the moment. This one actually is all about playing music as you drive.
Yeah, this is trending right now because there is this road that is near to Fujairah city. Now, we don't often talk about Fujairah. It's an emirate, obviously, the other side of Ras Al Khaimah. People tend to go there more for holiday. But there is this road near to Fujairah city that if you stick to the right-hand side of the right lane, it has painted markers in the asphalt to create sound vibrations as you drive over them. So the contact between the road and the tyres make a tune. You know, no tech, no tricks, just clever engineering. And what's the tune, I hear you ask? Well, it's Ode to Joy by Beethoven.
Let's go from being a little bit perhaps on the gimmick side to something that is very real, and this is the leap forward for urban mobility in Dubai with the news that test flights for aerial taxis have now been successfully completed. What does all of this mean? Well, this brings us significantly closer to seeing these futuristic vehicles in action across the city, Mario.
Yeah, we'll probably see this as early as next year. This was a collaboration between, for Dubai, it's between a company called Joby Air and the Roads and Transports Authority. They completed the region's first test flight of an aerial taxi, which actually took place at a desert site here in Dubai last week. The taxi operates on electric power, producing zero emissions, and is going to feature 6 rotors and 4 battery packs, enabling the flight range of up to 160 kilometers and traveling at a maximum speed of 320 kilometers per hour. Now, it can accommodate 4 passengers plus the pilot, so 5 in total, and operates at lower sound levels than helicopters, needing less horizontal space at takeoffs at vertiports. A journey from Dubai International Airport to the Palm, for example, is expected to take just 12 minutes compared to 45 minutes by car. Now, air taxis, like I said, are scheduled to be in operation sometime next year.
I think I'll be waiting just a little longer, Mario, before you see me launching myself into one of these taxis.
I have to admit, I'm with you on that one. Listen, we cannot stand in front of, in the way of technology, and that's great. I've been in a helicopter, so I can't say I would never not go into one of these, but I think I'm going to wait a little bit, make sure that the safety record is exemplary, for want of a better word, before I'll venture into one myself.
Thank you, Mario, for this update for our Australian audience. Enjoy your Wednesday in Dubai, and thanks again for coming on to the Real Estate Breakfast.
Thank you, Craig, and happy week to all the listeners.
We connect you to the best real estate information across Australia. The Real Estate Podcast.